I look at the Hong Kong market and what we see today. Well, in terms of the valuation, it's not quite high. It's even pretty low, but if you compare to a previous period of economic stress that we had in 2008, 2009, or 2011, we still stand at a premium in terms of valuation. So now what we have in Hong Kong is that we need to review the earnings on the downside, and probably we need to review on the upside the risk premium. So I would say it's maybe a little bit too early to be back on the equity market at this stage.
Okay, let's talk about your broader strategy then for Asia. You like onshore China and Japan equities. Why is that?
Yeah, so these are really in the Asia-Pacific region, the two equity market. We come back on Japan earlier last month. Too much pessimism on the market, very underweight positioning, and really some consumer tax being factored in the price already. So what we saw was very much a repeat of 2014, when the market is starting to rise after the hike is being implemented. And China is a little bit of a different thing for us. It's more a strategic view that we have taken on the market 18 months ago. And we see that the onshore market is not reacting to the same kind of news flows that we see on the offshore market. And it is treating more the trade war as more some noise, and really focusing on what we see on the earnings, which is actually not bad at all. And there is still what we have called the China put, which is still on in our view, with the ability of policymakers to do something on the fiscal side or on the monetary side if really there is some more pronounced slowdown.
Asian markets more broadly in the money today. We did, of course, see US earnings season kicking off essentially overnight, and a number of beats, particularly on the banks. Are you surprised at the strength of the earnings picture stateside so far?
Yes. So what we see in the US, or what I could read this morning, is doing okay in terms of earnings. The view that we take on the US equity market is that there is not much upside, but the downside is going also to be pretty limited, with a very slow growth of earnings and some support which are coming from share buyback. So overall, the US market is supportive from what we see in Asia equity. But the problem that we have with Asia equity is that yes, we have the inflation being better controlled. We have the central bank easing. We start to see some fiscal easing policy as well. But the earnings actually remains depressed, and I really would like to see the dollar starting to depreciate versus the Asian currency before getting more aggressive on the equity market.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.